Central banks around the world have injected money into the economy at a record pace to try to fight a global recession triggered by the coronavirus pandemic.
Just getting word from the Federal Reserve.
Bombshell announcement from the Federal Reserve.
It is an absolutely historic week, both in terms of the speed of Fed purchases and, of course, the magnitude.
Since mid-March, the Federal Reserve's balance sheet has ballooned from $4 trillion to around $7 trillion, equal to about one-third of the value of the entire American economy.
A new CNBC survey showing that market participants expecting trillions more in stimulus from both the central bank and Congress.
Yeah, so the injection of liquidity is literally injecting reserves into the banking system, injecting cash into the banking system. The Fed's balance sheet increases. Some people call that printing money. That's an outdated term, but it's still a term that describes what's going on. You're literally creating, the Fed's writing a check on itself. They're creating assets out of thin air. And expanding their balance sheet. And in the last crisis in 2008, the Fed's balance sheet was about 800 million, and then it swelled up to well over 4 trillion. And then the Fed started to reduce its balance sheet through as it was raising interest rates and letting some of the assets that it had purchased run off. But now that's reversed course, and now the Fed's increasing its balance sheet again. And so from the Fed perspective, we're north of 4 trillion, I think around 4.2, 4.3 trillion of Fed balance sheet right now, again, up from 800 million in the last financial crisis. One of the analysts who I must take my hat off to, Doug Nolan, who really got this whole thing right and has been chronicling what was coming in the credit markets. He predicted that the Fed's balance sheet would swell to 10 trillion in this next crisis, which I think is here. He predicted that, by the way. He's been predicting that all along, so that's not a new prediction. And at the time in last fall, when he published it most recently, it struck me as way too low. And in fact, actually, I think it's going to turn out to be way too low. So everyone, from my perspective, and again, I should step back and say, none of this is advice. You're getting what you're paying for here. This is just one person's perspective, and you can't rely on it. But hopefully, it'll just help make you think. That's the only thing I would like for you all to take away from this is just one person's perspective to help make you think. It's a different perspective than you're going to read in the mainstream press. But anyway, coming back to is the $10 trillion number that much? You know, back in last fall, I think a lot of people were shocked by that prediction. And at the time I said, no way, that's way too low. The Fed's balance sheet is actually going to end up being a lot bigger than that.
What's going on, everyone? This is Jordan with Conquer Trading Investing, looking here at a chart of the S&P 500. This is a little off. When I say this is a little off, what I mean, people are wondering why I'm focused over here. I want to take a look at what's exactly going on right now. This is a technical market. We're trading completely off of the price action. You could see what happened is that this was resistance, this level at 32 that we came into a few different times. And then finally, we were able to break through this week and now have since pulled back, testing that broken resistance as support. And earlier today is an entry signal here as it resumes back upwards over here. Now, people are wondering why I'm not extending these trend lines over here. This trend line over here, this is our support. As long as we're above that trend line, right, we are definitely have this ultra bullish bias over here. It looks like we're getting ready now to extend towards another leg up. Maybe we're going to have the Dow. Maybe we're going to have the Dow making new highs over here, taking out their June highs over here. That would be the most bullish picture that could be put together with the NASDAQ already making new highs, new all-time highs over here. That's not a double top. And then you have the S&P, it's already taken out its June highs. So you have the NASDAQ and the S&P, right, which are going ahead and they continue to make new swing highs. The Dow lagging on the verge of possibly taking out its June high. Then you would have all three indices since the March lows, going ahead and making new swing highs. That would be another bullish technical indicator over there. It's all a dollar story, and it's all about the dollar. We'll look at that in 1 second. I want to come back to the S&P. This is important. I want to talk about why I'm focused on that break of that resistance we've been watching. Remember, it was right here we took profits. It was right there we took profits off longs, got out of the market completely. Right now, re-entry, now that we've started a new leg up. Now, what happens for those waiting to buy off support? Okay, next time we come into support, you'll have an opportunity to see if that resumes off it, and you could get into the market then. Now, why didn't I do this? This is the question, and I want to really show you. Let me come over here to the S&P and just let me move this for you so you could see clearly. Now, the question is this over here, these trend lines and this trend line over here, the reason I showed it, because I then cloned it. You just click clone, and then I've been using that trend line now. Like, that's this trend line right here. That's this trend line right here. This one here. Another one does fit down over here. You could see it if I left it there. There's the support. Support is where the candle's closed. That's an important line. I just don't need it on my chart. I'm just deleting it. And people are wondering why I'm not just extending this one right now, right? You could see that we're coming into that resistance right over here. You could see that. But you could see that we've also broken above that level, this level right here. Let me make it really bright for you for a moment, just so it stands out. That level we've been above once over here, and then again over here, and again over here. So I would be more inclined with the bullishness, the momentum that we got going on over here. I'd be more inclined to think that there's a better chance that we come in and we do extend this current range that we're into right now, right? And this resistance will coincide with that next resistance that I am following, the 33.20. So I don't feel the need to be using these right now, these two trend lines at all. Let me see if I could go ahead and actually put them back, because I don't want them painting my picture. Yeah, you could see them over there, but this horizontal resistance at 33.20 carries more weight. It's more important. Always give more preference to the horizontal support and resistance levels. Well, of course, we trade off the trend lines. We use the trend lines, but always more importance to the horizontal levels. At least I do. And here we are now resuming off. It's a big day today, this afternoon, earnings seasons. You have Microsoft, which is a big release. And then also you have Tesla. We're going to see if Tesla is profitable. I think they're going to be. I think that we're going to then have talk about it being added to the S&P. People are going to be wondering, is that priced in already into Tesla? Let's look at Tesla for a moment over here. People are going to start be wondering, is that already priced in? Could this thing go higher? What's the future? Really what it comes down to, is this. It really comes down to over here that the Fed is printing money. The Fed is printing money. They're inflating assets. Stocks go up when QE is going. That's what's happening right now. Will there be pullbacks? Hopefully that you have, because a lot of people keep looking to pick the top over here. A lot of people keep trying to sell the top. Eventually, they're just going to get tired, right? You have to be hoping that you're able to go ahead and buy the dip when things are going up like that. Silver, perfect example, because looking at silver, I couldn't have got into silver even if I wanted to. But if you looked at the overnight high, because it happened too quickly, the overnight high saw over a 7% drawdown, and we've been talking about how on a 7% drawdown on silver, that's the time you step in. Yeah, I would have needed some type of automated system that was continually setting a buy order, for every 7% drawdown off the high. I don't have one of those. I wish I did. I would use it in this market right here. I'd tighten that up. That would be probably about 4% on gold, maybe 5%. And those are the pullbacks you'd be looking to buy. On Bitcoin, that's going to be a little deeper. That's going to be a lot deeper. That's going to be more like 20 to 30% pullbacks you're looking to step in and buy off of Bitcoin. When I say it's all a dollar story, we see some big move on the dollar today, actually. You saw this support over here at 95.07. It's still green. I have to switch that over right now to resistance because we are now closing below it on the daily. And the reason why I say it was wild, because after looking like we were holding that level, that 95.07 level, and you could see price was resuming up. This was a green candle at the time. This morning, during London, that looked inviting, and then you could see swooping in that strong bid against the dollar, and that sent it below the 95 level. We've since come up and are testing that. If we start resuming down, that's when we have the confirmation, and at that point, we are looking at next a test of the 94.64 low, going back to the March low. I bet that gives. So the real test will be coming in somewhere around 94. The next real test for the US dollar. So I watch the DXY, the dollar index. I understand that it's heavily weighted towards the euro. I use it as a proxy for the US dollar. The Bloomberg has also a trade weighted dollar index. I wish I had a Bloomberg. I really do. We said we have Microsoft earnings today, as well as Tesla, is why I started talking about Tesla. It seems to me what happens with Tesla, just let me talk about it since it's a big day. It seems to me what happens with Tesla is that it's going to be in earnings. Then there's going to be talk about adding it to the S&P 500. There's going to be that debate going on. And price will continually rise, mainly because the markets are going to continue to rise. And also because, generally speaking, any company that's added to the index, what happens up until they're added, the stock tends to rise, and that tends to be the intermediate term top after it's actually added. So it's kind of, as always, buy the rumor, sell the news type event. So anyway, we get to look forward to Tesla's earnings and see how the market reacts today. I'm focused on the dollar. This is a dollar story. The dollar's driving everything. The dollar is driving this bid into precious metals, right? This silver now making 4-year highs. Silver now making 4-year highs as it crosses, $23 or comes into $23 over here, back where it was now. That's not 4 years. What am I talking about? That's now 7-year highs. 7-year highs. So silver stepping up over here. Gold still now coming into all-time. I believe there's going to be a pullback in gold as it reaches all-time highs. Whether that's a little bit under, at, or a little bit above. Some point this is going to be a trigger for the next pullback on gold that I hope that that we're all smart enough to buy into, because once it starts making new all-time highs and once it takes the second look at it and starts breaking above, this thing has room to run. It's the perfect environment for precious metals, and it's the perfect environment for Bitcoin. It's the Bitcoin irrelevant of the fact that the Federal Reserve is printing money that not just the Federal Reserve, and it is the Federal Reserve, and the Federal Reserve has signaled that they will continue printing money, trying to keep this economy running hot rather than getting behind it, right? So you have politicians and central banks looking to spend right now. We're in there. They don't think, because we're in a deflationary type environment, they don't think that they can cause inflation. They sincerely don't. But after a while, what happens when you keep printing dollars? We're already seeing priced into assets. We're seeing stocks going up. What happens when the Fed's printing money? What happens when QE is running? Stocks go up, right? Does it cause inflation? No, it causes deflation. What does that mean? That means that they think that they could print even more and more and more. They're now floating numbers around like trillion and $2 trillion like it's nothing. Expect more of that. So next move here on the S&P 500, I'm looking for a test into the 33.20 area. That's the resistance that I'm looking for. Will I be selling that resistance? Does it really make sense to sell equity markets right now? Not for me. Not for me. There's such lovely opportunity elsewhere right now. By the way, let's take a look at the NASDAQ. And people, are continually looking for the top. Thing keeps going up. I don't see, again, when it is time to call this thing rolling over at a market top, we'll be there. The markets are not the economy, that's for sure. When the Fed is printing when the Fed is inflating asset bubbles. Let me come back to Bitcoin over here. And the reason I say that is because we're getting close. We're getting close right now to calling the bull market here on Bitcoin. I think as Bitcoin goes off onto this bull market run over here, and again, this has nothing to do with the Fed. This has nothing to do with the Fed. This has everything to do with Bitcoin and its 4-year cycle. Here we come. The fact that it's got this liquid fuel behind it, great. Let's see what happens during this bull market cycle. I think that once we break this trend line, the bull market will have begun. We're going to then crush through the 10,400 resistance. That confirms it. And I think we're going to see a pretty sharp move into 14,000. That's all going to be transpiring pretty soon. Obviously, I made some purchases in to altcoins. I had bought into Ethereum. Now this was done with a small portion of my overall portfolio. All three of these purchases together. And I do hope though that, scaling into them further as they continue to grow, that, they can end up being, not a small portion of the portfolio, but perhaps a pretty nice one over this next bull run. Also into Linked over here, I saw that once it was down 20%, right? That's when I jumped in, right? And the same thing here on Tezos. Tezos was also down roughly, I think that was a little bit less. That might have been like 15%. It's also showing 20%. Maybe I got it at 15%. I don't know. But both of those and Ethereum, I've been building a position. I do believe they'll be the only three that I look to position myself into during this bull market here in altcoins. Outside, of course, of Bitcoin itself. We all know that, though. So when we talk about this dollar move, how far could it go in the near term? And it's always been not so much price as it is this trend line. This trend line over here, which goes back 12 years, right? This goes back to when the Fed last started QE, and here we are coming up against it. So what will happen over here? This time is hugely different than when 2008 was. 2008, the Fed expanded their balance sheet $850 billion, right? They just went to 7 trillion. So they've gone up 6.3 trillion since 6.3 trillion. So, the next trillions are starting to come quick. Could we see a prolonged move against the dollar? It looks like that's what's shaping up. It looks like we could possibly break this trend line. If we break that trend line at that point, the next stop would be 1.24 on the euro US dollar. Do I think we're going straight up? No. Do I think that we probably, as we come into this trend line resistance, that's a place to take profits? Yes. Right? Let's see if price consolidates. Wait for it to see if it breaks above. Then we could get into the trade again. So still holding, looking, and the target has always been into this resistance over here. We're coming up a lot faster and stronger than I thought we would, which means that we have the possibility of going higher than I thought we would. Right now, that resistance is coming in somewhere around 1.17, right? And go a week out, and that starts coming down, go a couple of weeks out, go into September, right? And then we're still at 1.64. So we'll see. That looks like right now the price target to take profit on the euro US dollar. That might be the dollar would be somewhere around where, so right into that target of 94, more or less, and it might find support there for a little while at least. We'll see what happens, but we are coming down quickly. Breaking this 95 support today on the dollar is a big one. If the next bar over here is a resumption down, then we're going to be looking at the March lows. That does directly affect the equity markets. Equity markets are also rising here on this weaker dollar trend. The only thing that's different this year is that gold is now rising. on a weaker dollar. Why do I say that? Just look here at this exact chart you're looking at. This goes back to January the 1st, 2020. You could see gold trading at 1534, and it's been straight up the whole year except for the crisis. Take a look at the dollar at the same time, and the dollar going back to January, same thing. The dollar going back to January the 1st went from 96, and then through that same period was trading up to 100. So why the dollar was strengthening, gold was strengthening. Now you have the dollar weakening and gold strengthening. This is a new environment. Obviously, it's a much different situation than we were back in earlier in the year. And think about what's going on when we just need to talk about the expansion of the monetary supply, and we need to talk about the coming action, which is further expansion. Is it possible that the Fed's balance sheet, which is roughly now 7.1 trillion, could double any time in the next 18 months? All right, everyone, have a wonderful day. Thanks for listening. Thanks for smashing that like button and helping the Google algorithm know that this content is liked. Thanks for leaving a comment and engaging with the community. I'll see you all tomorrow. Have a beautiful day.